Folks, let's cover one of the most lucrative tax credits Congress has offered to businesses in decades. Employee Retention Tax Credits, or ERTCs, were enacted as part of the CARES Act associated with COVID-19 back in March 2020 and subsequently expanded by a new law in December 2020. The credit is up to 70% of the first $10,000 of wages paid to each employee every quarter, beginning Q2 2020 and stretching all the way to Q3 2021. I'm sure you're already doing the math in your head to realize how big this tax credit could be for you. Unfortunately, the market has been heavily saturated by tax credit sales organizations that purport to be experts in these tax credits. They offer to calculate your credits for you and take 15 to 25% of the credit right off the top. Again, if you're doing the math in your head, you can sense the fee on this is significant as well. If you can believe it, I recently saw an advertising agency expand into tax credits and start selling these calculations and tax form preparation services. But Linked Accounting is motivated to maintain our long-standing relationship with you. But sadly, these tax credit sales organizations are only motivated by big commission dollar signs, and the more tax credits that they can give you gives them a bigger commission paycheck on the back end. What has emerged is a lot of error and fraud. First, we urge you to call us before you sign engagement letters with a tax credit sales company. Second, based on our few tips here, if you believe you are eligible for these credits, call us. Let us quote you a fair price to get these credits calculated and applied for. And unlike these sales organizations, our fees will be warranted against future IRS audits. Let's do a quick dive into eligibility. There are two primary ways you can qualify. Each calendar quarter is qualified individually. First, you can qualify if your current quarter's revenue is down more than 20% compared to the same quarter in 2019. If you saw a big revenue drop in that quarter, you are eligible. Or second, you can qualify if you or a major supplier has been the subject of a local, state, or federal restriction on your ability to operate normally due to COVID-19. This is the area we see tax credit sales organizations exploit the most. Let's give a few common examples we see. First, let's say you're a restaurant owner in California where the governor has limited you to 50% capacity inside your restaurant since COVID started. This is a perfect example of a government order that has limited your ability to generate revenue. Conversely, many of us have had to adapt to new ways of doing business with our customers. For example, I'm doing far more Zoom meetings than connecting in person. While this change represents a different way of doing business, it did not occur because of a government-imposed restriction on me. I hope you can see the difference here. The first example would qualify you for the ERTC credits, while the business adaptation example with Zoom would not. Once we can validate you qualify for the credit based on one of these two tests, it is time to turn the wheel over to our team at Linked Accounting for us to calculate the credit you are eligible for and file the required tax returns. These credits are fully refundable, which means you will get a check from the IRS for the whole amount. It typically takes the IRS about 6 months to process your refund request. Again, please do not sign any engagement letters with tax credit sales organizations and instead give us a call. Our relationship-focused approach will always put you at the center of what we do.